Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Y'all know that drill. Smash that like button. Subscribe if you already haven't. Just want to do a little disclaimer. Nothing said on this video or past videos should be construed as financial investment advice. Just my opinion. See more on the disclaimer. And let's get into what I wanted to talk about today. There was so much. I just read so much. Nothing. The market was closed down today. But we'll start getting into this first. Uh, right here, right here, Southwest expands a cost cutting by announcing 15% reduction in corporate overhead work. So right here, Southwest, they're laying people off. Uh, they reduced a pilot headcount at a couple of bases, pause on hiring, and look at this, 1750. So 1,750 people in their corporate overhead. So yeah, these are good paying job leadership positions. Look at this, senior leadership and directors, vice presidents. This is $210 million. So it's gonna be a lot of people. That's a lot of people, a lot of jobs. And so yeah, there it is, Southwest. More things, and you got maybe you got another another so that was one thing. So got that. But let's go to the other thing. This is the other thing. I wasn't going to start with layoffs, but more layoffs. Here it is, white collar recession. And I thought this was interesting. The U.S. professional and business service job has been shrinking for 1.5 years. Look at this. U.S. Professional business service sector lost 248,000 jobs since May of 2023. Jobs have dropped 17 months straight, longest since the great financial crisis. So, see the layoffs here, 90. That was during the recession. This was the bursting of the tech. This was '08. And 2020, that was the pandemic. But now we have it here again. And so hiring rate dropped 6.4%, third lowest in 15 years. And of course, a lot of these companies don't even hire Americans anymore. So it's really bad. Look at this, white collar hiring levels lower than the pandemic. So there that is, just more and more. And these are good paying jobs. These are not. And one of the things, and I think this is why I said higher interest rates and a rising dollar, this is eventually going to hit the stock market. And this was an article, I don't know when it was, February. Oh, it's updated February 17th. So see it right here. So it's up to date. So look at this right here. Rising dollar pressures earnings as from companies such as Amazon and McDonald's, signaling more pain ahead. So there's that. Let's see. Yeah, big tech behemoths, consumer-facing brands. So yeah, you're looking, and this is really, look, Apple's one of them, 55% revenue from international sales, probably international government contracts. So here's another one, Alphabet, Microsoft, Tesla, Meta. So there it is. So McDonald's foreign currency to be a full year headwind. So Coca-Cola had good earnings, whatnot. So if you're looking at it, the strong dollar, it's starting to hurt. It's starting to hurt. The strong dollar. We're going to get into more of them. But there's another thing I wanted to show you all. And so I'm going to go look and find it. I should have had it, but Microsoft data center. Yeah, this is very interesting. Uh, so I found it. We're going to see the article. I read it on Seeking Alpha, but I just didn't feel like going there yet. I should have saved it for this, but uh, so anyway, here it is. Microsoft invests 704 million expanding Polish data centers. So, golly. And let me see. Artificial intelligence. So let me show you. I wanted to see if this has. Of course, it's going to be in Warsaw. That's the capital, if any of you don't know. So here it is. When I say tech, is basically just government spending, and that's all it is. Company will collaborate with Polish National Defense to establish a framework to strengthen national cybersecurity. All this is government spending. That's all it is. Has nothing to do with this is not none of these customers for and I just showing you right here the consumer means nothing in tech. All it is government government. That's their customer. Tech, they don't make money off. But that's why they sell your info. Because the government's their customer, not you. So anyway, and this is why there's going to be no real cuts, and why I say Doge is a joke. Yeah, they're firing federal workers, but and they're canceling some contracts, but trust me, they're going to be new ones, and they're going to be ones going, and they're going to be going to these people. So anyway, just wanted to show you right there. Company will collaborate with Polish National Defense established framework in cybersecurity. So yeah, they're putting 700 million, but how much are they going to rip off from Poland? And that's what's happening. So anyway, let's go to the markets. Warren Buffett continues to dump stakes in U.S. banks. Sold 40.6 millions of Citigroup. It's almost 75% of his position. Also sold 95 million in Bank of America, reducing its stake to 8.9%. So there it is, Buffett selling the banks. And what else is he selling? He's buying at least like Pool and Domino's, Occidental, but you look at him selling T-Mobile. I don't know what Louisiana Pacific is. Liberty Media, yeah, I won't. But look at this. Capital One Financial, Bank of America, as we said, Citigroup. But he's also he sold all of his Vanguard S&P 500 ETF and his Spider ETF. So he's completely out of the S&P 500 ETFs. So obviously, and the other thing is his cash position is growing. The only reason he has a large cash position is he thinks the market's going down. That's what it is. 350 billion cash position. So he's not a market timer, but you don't have to be exactly right. And with his amount, you're never a market timer. So he's clearly sees some sort of correction or whatnot coming. So let's go to the other one, chart of the week. If you look at this bull bear market indicator, 73%. So up around last time. If you look at this was right before 2020, and then '08, and the other time around the tech bubble. So as you can see, a lot of bearish indicators. Not saying this is going to happen tomorrow, but and then lastly, Wall Street's bullish on gold. Gold could reach, now they added could, they made sure, so that just in case you're like, I thought you say go to 3,500, and they'll be like, no, we said it could, not that it would. So 3,500, that's Bank of America's target. So yeah, they say it's not impossible, but yeah, if you look at it right now, gold, I think it's doing well. I think it's going to make over 3,000. And then we'll see what happens from there. I think that's just my short term target. I think it's going to rise again for another 12 to 18 months, meaning this year, the rest of this year, maybe 6 months more. And it's going to do pretty well. I think it's going to get close to 4,000. I could be wrong. I don't think it will go anything more than that. I think there'll be a force majeure. As you can see, the economy's already going poorly. If you looked at my video yesterday, which is in the cards or somewhere, the auto loan bubble, I think there's going to be a lot of debt. And that's all. So anyway, you like this video, hit that like button, subscribe if you haven't, and remember the disclaimer, not financial investment advice. And read below more on the disclaimer. I will see you next video.